Hey guys, welcome back to this channel. Now, I want to give you two different perspectives about the way that Bitcoin is going to go based on analysis by two individuals that I respect a lot. So on the one hand, you've got the callings for Bitcoin going down to 60K, all related to the Doge cuts, tariffs, and a lot of these new economic policies that the Trump administration has put in. And on the other hand, you've got Arthur Hayes here, who I've been following his macro news for a long time, and his perspective is that all of these policies are going to end up having the effect of forcing the Fed into going along with funding all these government plans and ultimately staving off recessionary fears, which ultimately will lead to more credit creation, inflation, and Bitcoin being pumped up. So before we get into it, my name is Dave. If you like this channel, make sure to subscribe. And if you're interested in buying cryptocurrency without KYC, you can use my referral link in the description down below for HODL. That's a non-custodial trading platform that doesn't require any KYC to sign up, and you can use a multitude of different payment methods to buy Bitcoin, and you can do the same with local coin swap. It's one that I highly recommend. And you've also got BitValve and Bitpapa if you're interested in doing the same thing with Monero. So let's get into it. So the TLDR of the first article is Trump policies aimed at slashing the deficit are bad for risk on assets, according to Lecker Capital's Quinn Thompson. And the White House is likely to keep pushing these painful policies until the market screams uncle or the midterms get close. The worst part, it's going to be a frustrating slow bleed rather than a quick plunge. So I'm going to give you I'm just going to highlight a few points of the article. I could see this go back to 5 handle by the end of the year. Quinn Thompson, founder of crypto hedge fund Lecker Capital. A 5 handle price between 50K to 60K would be down substantially from the already... that's not what I'm looking for. So why does he think this will happen? So there's going to be 4 economic headwinds, according to him. The first is Doge. In its efforts to reduce the US deficit, it's bent on cutting down government spending, which has been one of the largest drivers of job growth in recent years. The labor market was already wobbly when the Biden team handed over the reins to Trump, Thompson said, and the new government's fiscal arm isn't interested in propping things up anymore. Now, something I want to deviate a little bit from is that when we talk about government spending, we're really talking about government debt. And when we talk about government debt, we're really talking about the very unethical monetary institution that we have, essentially printing money out of thin air to finance this debt, ultimately stealing wealth from ordinary people that use that currency. It's kind of like an unofficial tax, right? So the government actually reducing the deficit and reducing debt by cutting down on spending and reducing the size of the bureaucracy is going to have the effect of actually reducing inflation, because they're not actually going to be printing money out of thin air to finance this. This is a good thing. But at the same time, if we're just looking at it from terms of Bitcoin is going to really benefit from this, because Bitcoin is, in a way, if you think about it, shorting the monetary markets. So if there's going to be more inflation because there's more dollars printed into existence, Bitcoin benefits because Bitcoin's got a fixed supply, and it's ultimately a hedge against inflation. And if Doge is going to successfully able to hack down the bureaucracy and reduce the government spending, this actually isn't going to be as good for Bitcoin as you would think. But let's go on. Elon Musk, the main force behind Doge, said last week that he was aimed to cut $1 trillion in government spending by the end of May. He also said he wanted to cut 15% of the government's annual spending, meaning almost $7 trillion. Now that's a huge amount that is not going to be flowing into risk on assets, because all that money that's being printed out of thin air going to feed this kraken of a bureaucracy. You know, all of those hedge fund managers and retail investors that are basically betting on inflation going up because of, wild government spending, maybe they're less interested in buying Bitcoin as a result. So even if Doge fails its stated objective and only manages to cut, say, 100 billion over the course of 4 years, the bigger cuts are likely to occur at the beginning of Trump's term, not the end, Thompson argued. This means that Doge's impact on the economy and consumer sentiment is likely to be felt in the coming months, no matter whether the agency actually succeeds or not. Second, the crackdown on illegal immigration at the southern border, combined with the renewed emphasis on deportations, is bound to affect the labor market. Thompson said, "Migration is growth positive because it puts pressure on wages. If the labor pool dries up, workers will demand higher salaries, which some businesses won't be able to afford. Thompson's third issue is tariffs. The Trump administration keeps changing up its tariff threats on a day-to-day basis, sometimes promising new ones, sometimes calling them off, creating doubt as to whether the majority of proposed tariffs will actually ever go into effect. But the important thing about tariffs is they create uncertainty for businesses, which may elect to delay investment or hiring decisions until the tariff situation is resolved. Finally, the Federal Reserve doesn't seem to be in a hurry to loosen financial conditions because inflation data hasn't been great. The US Central Bank cut interest rates by a full percentage point at the end of 2024, and even that was enough to push Bitcoin above 110K. Thompson says he expects the Fed to cut anywhere between 25 and 75 basis points in 2025, but these cuts will be spread out in the second half of this year. Now, it's this last point I want to focus on just for now. I mean, this has had a really big impact on what's been going on with Bitcoin. So a huge reason for the run up to 110K was not just the cuts that happened, but the expectation that there was going to be even more cuts in 2025. So the fact that we're only going to get 25 to 75 has kind of been underwhelming for speculators. And as a result, a lot of people aren't going into the market because they don't necessarily think that the Fed is going to change their mind and get more dovish on their interest rate policies. And yeah, when it comes to tariffs and migration being cut down, I guess at the end of the day, these are just uncertainties about the overall state of the economy. It's not going to be certain as to whether or not these are going to have a recessionary effect on the economy. If there's a recession, then obviously it's going to affect all risk on assets. And this is basically what it comes down to. What's the bottom line? With such headwinds working against risk on assets like stocks and Bitcoin, the crypto sector is unlikely to have a good year, Thompson said. The fact that the White House doesn't seem overly concerned about a potential recession is also a strong signal, he said. Besson is coming in saying, we need to right the ship, and righting the ship means cutting off the juice that was powering these crazy asset prices. The direct result of their policies working is a lower stock market. Now, to be fair, this is probably a good thing in general, like just for the economy, the stability of just society. I really hope that these things they work out. But again, when it comes to speculators like us, risk on assets aren't going to be juiced to the same way they were in previous administrations, where line always goes up because money printer is always on. Let's continue on before I end this. But how long is Trump likely to maintain course? Until it becomes too painful and even Trump's political base tells him to cut it out, or until the beginning of 2026. You can't be pushing a country into recession with midterm elections coming up. So no matter how painful this course we're taking is, when it comes to tariffs, illegal immigration, the Fed, not backing down on its quantitative tightening, all of these things will meet a brick wall at the end of the day because it's going to become too painful, and we are going to have some course reversal at some stage. By the end of that course reversal, who knows what the price is? Is it going to be 60K? Who knows? But this is the bearish case, and I think for the medium term, it's possible. I'm not holding out on it. I have personal reasons that I might get into another video as to why I think it's not going to be going down that far that soon. I mean, after all, this is kind of like a bullish year. I mean, a year out from, the halving. This is not typical for what we would expect. But then again, anything's possible, and I'm just putting it out there. Now, I want to get to this article. Now, this is a really long essay, and I'm not going to read everything in there, but I'm going to give you the TLDR of it. For those who don't know Arthur Hayes and know what his principal analysis is about, I could summarize his basis for being permanently bullish on Bitcoin as not as much to do with the technology itself, but simply the economics and the political structure that we have. Basically, when liquidity becomes cheap, Bitcoin goes up. It's as simple as that. And liquidity tends to get cheaper and cheaper, and the amount of money in circulation always continues to go up because of structural flaws within our system. And he's just looking at the different things that kind of ebb and flow this kind of back and forth, this thing where the Fed will pump interest rates or maybe they'll lower interest rates. There's different things that cause more liquidity to go into the system. But overall, on the macro perspective, there's always only going to be more liquidity, more inflation, and Bitcoin's going to go up as a result. But he's just looking at the current situation with the new presidency and how that's going to affect liquidity in the markets. We've got this very PG picture here. Let me just give you some of the too long didn't read notes of this. So his essay is like a satire to illustrate fiscal dominance. It's a concept that he described where Besant forces Powell to support treasury bond markets by resuming quantitative easing. So Trump's economic strategy is to reshore manufacturing and reduce trade deficits, but this requires government debt financing. So the US deficit is unsustainable and the Fed must print money to prevent market collapse. Powell has no choice but to pivot back to quantitative easing, which will boost liquidity and benefit risk-on assets like stocks and crypto. So US and Treasury yields. Treasury debt is growing fast, 36 trillion as of now, and investors demand higher yields. But since the US can't find buyers at acceptable rates, the Fed and commercial banks may have to step in to buy the debt via quantitative easing. So the Fed's dilemma: the Fed is caught between fighting inflation and supporting the government's need for cheap debt. Powell, despite past resistance, will likely be forced into more quantitative easing, similar to the 1970s policies that led to inflation. Fiscal dominance. The Fed's independence is eroding and it will do what's necessary to fund the government at affordable rates, even if it means printing more money. This dynamic is called fiscal dominance. Solution to funding. The Treasury will rely on quantitative easing, which means money printing, and changes to banking rules, like relaxing the supplementary leverage ratio and buy more bonds. This makes the government debt sustainable, but risks increasing inflation, which means increase in the price of Bitcoin. Powell's position. Despite resisting political pressure earlier, Powell will have to support these policies. His position is similar to past Fed chairs like Arthur Burns in the 1970s, who faced political pressures that led him taking the policies that he did. And as the Fed moves towards more quantitative easing and printing money, liquidity increases, benefiting assets like Bitcoin. And Arthur Hayes forecasts Bitcoin rising to 250K by the end of the year due to the flood of fiat liquidity. So the historical context is that Arthur Hayes references past economic crises like the 2008 GFC to argue that Bitcoin will react positively to increased liquidity, similar to how gold did during that period. Crypto, especially Bitcoin, is poised to benefit as the US government prints more money to manage its debt. So while Bitcoin is quite bullish, he just says be careful on capital deployment because a lot of things could happen in the medium to short term, which I agree. I think a medium short term, we could see something play out like what this person talks about here because of all of these headwinds and a lot of uncertainties related to a potential recession, changes to the economy because of immigration, tariffs, like a very tight federal monetary policy. But it looks like that long term, again, line goes up. It kind of is as simple as that. So guys, if you like this analysis, make sure to subscribe to my channel and use my referral link in the description down below. If you're interested in buying cryptocurrency without KYC, using a vast variety of payment methods, you've got TransferWise, you've got Revolut, Payoneer, you can even do cash. You can do cash meetings in your city or cash by mail. That's one of the best ways to de-grid yourself from the financial system. So if you're interested, make sure to check that out, and I'll see you next time.